This video is for all the business owners out there. I applaud you. I know it's risky to own your own business, but we're going to show you today how, as a self-employed person, you could go ahead and qualify for a loan, a house with 5% down. This program is new. It's been adjusted. And watch this video to learn more. Hey everyone, it's Juan Huizar.
And Phoebe Todorof with Sage Trust Mortgage.
Today we're going to be diving into your self-employed. How do you go about financing property? Because it's always tricky, right? You're self-employed and you call me and you have a lot of money. And the conversation goes like this. Hey Juan, I run this type of business, but my taxes don't look so great. Okay, I get this all the time. So this might be you, right? Today, Phoebe's going to tell us this new loan program specifically for self-employed. I'm excited to learn about it, so let's hop right into it.
Sounds good.
Phoebe, so just take it from the top. Why is this program unique? Why is it special? And why does it benefit our self-employed people out there?
So it's not a super new program. However, they've come out with additional options with lower down payments. So we call it the bank statement program. It's geared towards the self-employed individual who has really good deposits monthly into their business accounts and or personal bank accounts, but doesn't claim a whole lot of money on their tax returns or income.
Which is a lot of business owners. A lot of business owners covers them. Okay.
Yes, or they have a lot of expenses. You know, they have decent income, but a lot of expenses, so the net on their tax returns is not quite enough to qualify for a mortgage. So that it's called the bank statement loan. It is considered what we call a full documentation loan. However, they've rolled out programs lately that require only a 5% down payment, which is huge. Those types of loans required at least 10%, usually closer to 20%, because they were using your income to qualify for the mortgage.
And is this for your personal residence?
It is for a primary residence.
Okay.
It can be used for primary residence, and that's going to allow the 5% down. If you want to use bank statements for an investment property, you're going to have to put at least 10% down. However,
I'm going to ask.
Okay.
I'm going to ask because someone's going to be like, okay, but Juan always talks about buying a fourplex. And so what if I live in the front house?
Yeah.
Can I do 5% down?
On the 4 units?
Yeah,
yes,
I
but it
can.
needs to be owner occupied.
So long as you live in one.
Yes,
you're
and
good.
you don't own a home, a single family residence elsewhere.
You can't be trying to trick the bank, okay? So nice try, but it's tough, okay? So let's just listen. What we're saying is play by the rules. If you're legitimately going to live in it, you can do it.
Yeah.
Okay.
And you can be a first-time home buyer as well. Yeah.
Okay.
Yep.
So the 5% down is great.
Yes.
And the fact that, and so what you were saying is that in the past, they had bank statement loan programs for self-employed people, but they had to put more of a down payment.
Correct.
So now it's less, which is great. Someone watching is going to say, what's the catch? And my question is, what's the catch? Is the interest rate higher?
Oh yeah, of course.
Okay.
So, sorry, that is the catch. The interest rate is going to be higher, and they're going to have options to have PMI, which is going to have a little bit lower of an interest rate, or no PMI, which is going to have a little bit higher of an interest rate if you put less than 20% down.
Got it. Okay, so PMI, property mortgage insurance, and so in some cases you could settle for a slightly higher interest rate and not have to worry about that payment. But you don't have to worry about that for now. I think if you reach out to Phoebe, she'll say, the no PMI option is this, and the PMI option is this. And
options.
At the end, all you're going to say is, well, which one costs less? Is I think what you're going to come up with. And is there primarily a way, like, is it going with the higher interest rate is always cheaper, or is there like a rule of thumb?
No, because the PMI is going to be dictated, or the amount of the PMI is going to be based on property type, credit score, and down payment. So, the PMI could be very, very high if you have a lower credit score with only 5% down, right? Or if you have a, very high credit score and you're putting 10 or 15 or 20% down on that type of loan, which is allowed, the PMI is going to be lower with less than 20% down. So,
someone watching might be like, hey, 5% is good, but Phoebe, if I do more, can I get a lower interest rate?
Yes, yes. So every 5%.
Yeah.
Of down payment is going to improve your interest rate. So.
Okay. So that's really good to know. So, can you give us an idea on what, on average, no one's going to hold you to this. Like if they're watching this 6 months from now, interest rates change daily. So I'm just saying, for now, for those watching, it's March 21st, 2025. For this type of loan, like what are you seeing?
So I actually am working on right now pre-qualifying a client. She is looking at a single family home.
Okay.
She has a very high credit score. She is self-employed. She is looking to put 5% down, and her interest rate that I quoted her on Thursday was 7.625%. On a 30-year fixed mortgage, and that's with the PMI option. And I actually don't recall, but I think the PMI, it fluctuates based on the loan amount and the property type. So it did have PMI. That was the PMI option that she was looking at. But it was a 30-year fixed mortgage with no prepayment penalty.
Someone listening to this is going to say, they're going to fall over. They're not going to believe that someone would sign up for an interest rate of 7.625. But understand this. If you have a job and you're W-2 and you have this salary and if you qualify the traditional way, the conventional way, this is going to be shocking to you. But folks, this video is for the people who cannot go the traditional way. So this is like, hey, we have no other option. And a lot of times self-employed people don't have that option. So again, 7.625 is what was quoted this past Thursday. It's not crazy to the business owner who says, I didn't qualify for the conventional loan anyways.
They're unable to get a loan, period. So it works for them, and the payment works for them.
I like the fact that it's 30-year. Is there, I'm going to ask, is there any interest-only option on this?
Not on the bank statement program, because it's considered a qualified mortgage. So yeah.
Okay. Versus we did a video on DSCR, which is a non-qualified mortgage.
Correct.
This is qualified mortgage. And so this one just, if you have a business and a lot of large deposits go into the business, can we describe what large is? I mean, my version of large might be very little for someone much bigger, right? I don't know.
Well, so they're going to look at the minimum is 12 months of bank statements. You get better interest rate and terms if you provide 24 months of bank statements and they work. So the amount of deposits need to, so and then there's different types of calculations. There's going to be one calculation if you're using business bank statements. There's going to be another type of calculation if you're using personal bank statements. And you can use a combination of the both as long as you're not moving money back and forth between the two different accounts.
It's the same. It's the same money, and you're trying to count it twice, guys. Come on, that's a nice try, but you're not going to trick us, okay?
Right, but there's a lot of business owners that put some income into the business account and then deposit different types of income into their personal account, and it's completely separate. So if that's the case, they're going to allow both types of bank statements to be used. And it's a little difficult to describe how, but typically what they're going to look at is all of your deposits done over either 12 or 24 months. They have different they have different expense factors. So if, say, you deposit $10,000 a month, depending on your credit score, your down payment amount, and what type of business you run, there's different levels of expense factors. So let's just say, let's just do it with a 25% expense factor. So depending on your situation, $10,000 every single month has been deposited in the last 12 months, right? So they're going to do $10,000. They're going to minus out a 25% expense factor.
Okay.
Equally, so now your qualifying income is going to be $7,500 a month. So as long as your entire mortgage payment, including insurance, taxes, and PMI, if you choose that option, does not exceed 50% of the $7,500, which is $3,750, you're going to qualify for that mortgage. However,
What's
reminder.
The percentage? What was the percentage again you said?
50%.
50%.
50%.
Okay.
However, remember, your consumer debt is also going to be taken into account in that qualifying, unlike the DSCR loan. So the bank statement is like a traditional mortgage. However, the way that they calculate the income is different.
Phoebe, we know you could do loans for this one throughout California. So anyone watching California, my question is, can you do this type of bank statement loan outside of California?
Yes, in certain states.
In certain states?
Yes.
Okay, so
And reach out to me and let me know what state. But remember, this is an owner-occupied option. So if you're looking to buy out of state, your business needs to be portable to work in a different state.
I
right?
was just thinking someone lives in Ohio, is a fan of our show, thank you so much, and they're a business owner.
Yes.
And they're saying,
Correct.
hey, can Phoebe do my
Yes.
loan?
Yes. I don't know if Ohio, I don't have the list here
Okay.
in front of me, but yes.
We'll try to create a list, and then we'll have it down in the description by the time this video comes out.
Sure.
And so that you know, that if you're like, hey, I trust these two people, I would love for Phoebe to do the loan, then that would be great for them to just look, okay, it covers this state, and then you could reach out. And again, primary residence, and you're a business owner, and you don't qualify. If you qualify your traditional route, go to the traditional route. You're going to have a lower interest rate. We're not forcing you into this direction. We're simply saying you had no other options anyways. And so then this is a very good option. Anything else that you want to cover with this loan?
So one other thing about this, you don't necessarily need to be a business owner.
Okay.
Right? You can be an independent contractor who receives income via 1099.
Okay.
So a lot of those people consider themselves business owners
Yes,
because
and I
they're going
would
to
too.
file a Schedule
Yeah.
C. However, if you're getting paid by a company because you have a contract and you have those deposits, that's fine too. They don't need to be generated organically from self-employed type of income. There are people that receive contractual income on a 1099 basis, and you can use those deposits.
So this could be for all the artists out there, and we have a lot of freelance people. I'm not pointing anybody out, but so this is a great program.
It is a great program. Yep.
Awesome. Okay. Anything else? I'll give you the final say regarding this program.
One other thing too. So you can, if you're looking to buy a 2 to 4 unit property with that program, it's going to require more than 5% down. However, you can use your deposits from your banks.
It's going to require more than 5% down.
On the
If you go 2 to 4, it's going to.
yes.
Okay.
Yes.
Okay, got
so the single family is going to be the 5%.
5%, but
yes,
okay.
And
All
I
right, so
apologize if that wasn't clear earlier. But 10% down for 2 to 4 units. However, you can use your deposits from your bank statements, and you can still use the rental income from the other units that you will not be occupying at a 75% of the actual or market rent, whichever is less.
Okay.
So that's also an option.
I love it. Perfect. Phoebe, I thank you so much for telling us about this. And I get it. It's not a new program, but they made some adjustments. It's gotten better.
They've improved
5% down on single family homes, which is tremendous. And yes, you could apply it to 2 to 4 if you're going to occupy 1. And that might be the route for you to go. Again, if you're self-employed, 1099, this works for you. So hope you learned a lot. Send some comments, put some questions down below. Make sure to like, comment, and subscribe. Again, if you're interested in working with Phoebe, check out the website, contact her directly, and let's get you pre-approved. That's the very first step to knowing whether you're going to qualify or not. So until next time.